folks. Sean Broderick here at the New Orleans Investment Conference again. This time I'm speaking to David Wolfin. He's the president and CEO of Avino Silver and Gold. Now, that's a company I've followed on and off over the years. And one thing I've always liked about it is, you know how cyclical this market is. Sometimes things are up and sometimes things are down. Whatever happens, Avino comes through. They're able to muster their resources and in very challenging environments do pretty well. In fact, lately, they're doing better than well. He's going to give you the scoop on the 3 projects that his company has going and a lot more besides. David, could you please speak to my viewers?
Sure. So we're in our 54th year of being in business. My father founded the company. I worked for the company. So how we're able to survive, there's sometimes you don't get paid and you still work. So if you ever work for your father, you know they don't like to pay their sons much. So I built up my share position, and I'm the second largest shareholder of the company next to Coeur Mining. So Coeur sold us La Preciosa in March. And we're just launching our 5-year plan. It's transformational growth for the company. 3 projects. So there's the Avino mine, which is operating right now, generating free cash flow. In Q2, we had a EBITDA of 4.1 million US, free cash flow of 1.2 million, a few cents a share in earnings. So we have the Oxide Tailings project, which is the old tailings dump, and when we were mining in the 70s and 80s, we had poor recovery rates. So we couldn't reprocess that because it was an active tailings dam. Well, now we just built a brand new state-of-the-art dry stack tailings storage facility, and we're decommissioning tailings storage facility number 1, and we're doing a feasibility study on that to reprocess it. So,
okay. And so that's right next to the Avino mine.
Absolutely.
Saves a heck of a lot of driving. I mean, it's right next door. Yes. And so you were saying that you might process this differently, let's say, right?
Yeah, originally we were looking at heap leaching it, agglomeration heap leach. But for ESG reasons, there's a lot of people that live around there. We're looking at dynamic leaching. So it's a little bit more expensive to operate it, but it's in tanks. So it's a smaller footprint and higher recovery rates. So we expect it'll throw off about 2 million ounces of silver equivalent annually. Low cost because it's already been processed, so probably sub $10 an ounce.
Oh, very good. What's the all-in cost at the Avino mine itself?
Right now, it's around $16. Our cash costs at the mine level are $10. Mm-hmm. So with treatment charges and trucking and all that, it goes up to $16. With their 5-year plan, we're expecting it to drop to $12.
Okay. How did the La Preciosa deal come about? That's actually a very good deal for you guys.
It's been ongoing for a long time. When Coeur bought Orco in 2013, Mitch Krebs, the CEO, reached out to me. We got to know each other over the years. They did a feasibility study, and it didn't make sense, so they mothballed it. So I approached Mitch, and I said, if Newmont and Barrick can have operational synergies in Nevada, so can we. Why compete? Because our projects are right next to each other. So there was a bidding process, and we came out on top. And so we own it now. We paid $30 million in upfront consideration. There's other contingency payments based on milestones, and they paid $350 million for it. So it's a pretty good deal. We now have a combined 60 million tons of 43-101 resources, or 290 million ounces of silver equivalent, at 2,500 tons per day, which is the capacity of our mill. That's 60 years of mine life. So we're not planning to wait. We're planning a major expansion. We're doing surface community engagements on La Preciosa right now with the local ejidos, and we're planning to break ground and start putting in a mine next year.
Putting in a mine, but it'll take time to build that. What's the
It'll be
time frame?
a decline ramp, so it's not an open pit. So by the end of next year, we should be drawing ore out of it from level 1, and then it'll ramp down. It'll put in 7 levels. We'll ramp over to the Abancia vein, and then Martha. And then ultimately, over the next 5 years, all this development will allow access to more ore so we can justify another expansion in the mill. So we expanded the mill 3 times from when we reopened the mine in 2012.
Oh, you're speaking about Avino now. Right?
Yeah,
Okay.
the mill. So the mill, we're going to look to expand it again once we can feed a larger mill. So we're looking at, if you look at 2,500 tons per day, 2,000 tons per day from the oxide tailings, and another 1,500 tons per day, combined about a 6,000 ton per day operation, which puts you in the intermediate category. The reason why Avino is so cheap is the mine was closed for a year and a half while we started building the infrastructure that I just told you, the new dry stack tailings storage facility. So we have all the ingredients for this expansion. We've got excess tailings capacity. We got a 20-kilometer dedicated power line capable of 5 megawatts, and we're only utilizing 3. So we have that. We have the storage tailings facilities of about 15 or 20 years. When we reprocess tailings storage facility number 1, that will become vacant and we'll be able to use that again. So we've got that. We've got plenty of water and the support of the local communities. We have 100% Mexican labor force, right up to our chief operating officer, who's a graduate at Colorado School of Mines.
All right. So just to make sure that I have this all clear in my mind, you have the producing Avino silver mine right now, and that actually makes money.
Yeah.
You'll be using cash flow to work on the oxide tailings to turn that into an actual paying project as well. And then La Preciosa isn't too far from the Avino mine that you can actually truck stuff from that mine to be processed at Avino, which is why you're going to be making the mill larger, right?
Exactly. So the environmental footprint is nothing. It's just putting in a portal and then trucking it across the valley to the mill. So it's not going to upset anybody because it's a farming community there. They're all excited. They all want us to hurry up because they want jobs.
Well, I know you said 60-year mine life. I don't know anybody in this business who thinks in those terms, but that's great. But it seems like you have your next 10 years planned out, right? I mean, like what you need to do is to actually process and like manage and build all this stuff.
Absolutely. We got the expertise there. They've been doing it for decades. We've already delivered 3 expansions. So, yeah, I mean, the future's set for us.
So, let's say you get new production from one of your other projects in early 2024, right? What will that raise your production to? Do you know yet, or is that still to be determined?
So 2023, we're gonna go. Well, this year.
Well, it's late 2023 when you start pulling the ore out, right?
Yeah. So we expect to get to about 3 million ounces next year. So that's a 30% jump from this year.
Okay.
And then in 2025, we're going to go to 4 million ounces.
All right.
So there's another decent jump. And then it'll stay that way for 2 years. And then when we complete the expansion in the mill, it'll go up again further from there. You're looking from today about 350% increase in our operation. In 5 years.
All right. Wow. Okay. That's really that's really amazing.
And it's not luck. It's not M&A. It's just time and money. And we're generating the money to pay for it. When the feasibility is done on the oxide tailings, we'll then have the ability to get a revolving credit facility because we'll have reserves. So we'll have another lever to raise money if things get tough. And we don't want to issue shares. I don't want to issue shares because I'm the second largest shareholder, and that's how I plan to get wealthy. So I need the stock price to go higher.
Okay, good. Let's give people the stock symbol. You are listed on the NYSE, is that right?
Yeah, the NYSE American.
Okay.
ASM.
All right. ASM. Do you have a symbol up in Canada?
Yeah, in the Toronto, it's the same. ASM.
Oh, okay, good. Is there anything else you think you should add before we go?
I just think, everyone's talking about the green movement here at the conference. Think of where we're going. I mean, the demand for metals has to go up. The supply is shrinking because it takes 10 to 20 years to build a mine. How are we going to compete? I mean, the price has to go up. I can't tell you what it's going to do tomorrow or next week, but in the next 3 to 5 years, prices are going higher based on supply and demand.
All right. That's a great place to leave it. Thank you very much for speaking to my subscribers, David. I appreciate it. You folks, this was another great interview. There's so many interesting companies here at the New Orleans Investment Conference. We have to check them all out. Anyway, stay tuned. I'll have more for you. This is Sean Broderick, and I'll talk to you later.